Now what we need to do is examine the revenue model for the Empowa platform. Specifically, what are the sources of revenue and how will the EMP token play a part in generating this revenue? We have to think of the EMP token as the gas fee of the Empowa platform. But ultimately, the revenue model across the Empowa platform is actually quite simple. So there are generally 5 categories of revenue associated with the Empowa model, platform, or ecosystem. You'll have to forgive me if I'm a little loose with the nomenclature in terms of model, platform, or ecosystem, but fundamentally, I'm talking about the concept of Empowa. One of the first and most significant sources of revenue is actually underwriting. Now, the underwriting process is where Empowa will be making the decision to interact with a specific developer on a specific project to raise a specified sum of capital using Empowa instruments. Those instruments, whether now or in the future, we know them as NFT, SDRI NFTs, and that stands for Secured Defined Return Instrument, but it can take any form because we have to think that this ecosystem has the flexibility to adapt as technology allows it to. But in that underwriting process, that is normally a time where Empowa will obtain a percentage of the underwritten transaction, and that is also the point in which the collateralization actions will take place, where a fiat amount of money will be used to purchase Empowa token to secure the activity that forms a part of that underwriting engagement. The second area that is critical is transaction fees. Every transaction that takes place through the Empowa platform should necessitate the use of the EMP token. Now, when I say should necessitate, it does not mean it should be exclusive. So you may have a situation where individuals are able to pay for an instrument, a service, or a transaction using a combination of fiat money, but that will also be accompanied with a requirement to hold EMP token. All of this is to validate demand of the EMP token and, of course, to create sufficient demand pressure to ensure that the price of the token truly reflects its utility. The third area of revenue generation for the platform will come as we approach full token utilization. And this will be in the form of direct broker dealing fees. Now, what does this mean? There will always be a time where the fundamental value of an instrument that exists on the Empowa platform is below or above the market value. In the case where the market value does not accurately reflect the value of an Empowa SDRI NFT, and we know we can price these instruments because the formula exists in the black paper and they are structured as bonds, and bond pricing along with bond durations, Macaulay's durations, all of those toolings are long established mechanisms of measuring risk and return and valuations of bonds. Those same formula and tooling are made available to the Empowa instruments. So in an instance where the market value is significantly underperforming the fundamental value, it makes sense for Empowa's treasury to take a bolder position to take advantage of that arbitrage opportunity. And I can say definitively in the early going, particularly as I record this during the crypto winter of 2022-2023, that as projects on board, the value is going to significantly underperform the fundamental value of the token. In such instances, it behooves the Empowa Treasury to take active positions to ensure that they are able to capitalize from that, what is effectively an arbitrage opportunity. The fourth area of income generation is where the Empowa platform actually invites qualified broker dealers for a fee to act as market makers. These market makers can either be specialist market makers for a specific instrument or generalist market makers throughout the platform. But we have to understand that every single time we have an Empowa SDRI NFT, we should not assume that an investor has the intention of holding these NFTs to maturity for 10, 15, 20 years. The liquidity of these instruments and the fact that we now have pricing models that hew to traditional financial standards means that investors will be able to enter a position and exit a position at timings of their choosing. That's one of the beauties of the Empowa platform. And this is one of the reasons why we're actually able to offer capital at a lower cost of capital to property developers. The fact that as an institutional investor participating, you are not locked in to the investment for an extended period of time. You can trade out or buy more in order to bolster your position. So those market-making entities would be expected to pay a fee both in the Empowa token and potentially a fiat fee for the privilege of earning those profits within the platform. And lastly would be a standard assets under management fee, which would come in the form of a low basis points, which is to basically offset the cost of the fact that when trades are made, which will incur a transaction fee, but accounts are held, there are administrative costs to the Empowa platform. So collectively, those 5 areas can be manipulated to create any fee schedule required to generate revenue, and all of those should be actively and heavily integrating the use of the EMP token.